funds?
Not much.
No? Okay,
Not
well, let me
much.
show you what a mutual fund is. A mutual fund is a pool of money, or think of it as a basket, right? And these pools have 100 million into the billions of dollars. And where does that money come from? It comes from people like you and I. We invest in these funds, and it will cost anywhere from $1 to $6 to put our $100 in there. So let's say you and I, or you invest $100 into this fund. And let's say you pay a pretty high fee. Let's say you pay $6. You're paying $6 for your money to go in here and be managed along with that 100 million. That is so affordable, isn't it? You only pay it one time. And what happens is that there's a company that manages this mutual fund, and what they do is they invest it in an average of 150 companies. And they invest it in the stock market. Now, what comes to mind when I say the stock market?
That you can lose your money, or it's risky,
Yeah.
to do that.
Okay, great. So yes, that's true. There is risk, and yes, you can lose money. But in these mutual funds, if you have $100 and it's spread out over 150 companies, what are the chances of you losing all of your money?
Not much.
Not much. Okay, so they invest in an average of 150 companies. There's some companies, they're so big, but they make product. They're industrial companies we don't even know. And then there's some smaller companies like that we do know, like Walmart, Wells Fargo, Verizon, Apple, General Motors, General Electric, Johnson and Johnson, Marriott Hotels, Delta Airlines, Arco. Have you heard of any of those?
Yes.
Probably all of them,
Yes.
right? Okay, and there's some companies bigger than them that we don't really even know the name. But when they make a profit, the profit goes back into the pool and ultimately back to us. And these are pretty good profits. They 6, 9, 12%. And the more aggressive you are, the higher the rate of return. And the longer you leave it in there, the higher the rate of return. But here's what happens, Martha. A lot of people don't know that the stock market goes like this. Would you rather have an account that grows like this, or one that grows up to here?
Well, I would like the one that goes up.
Obviously, right?
Yeah.
So one thing we like to say is that when people invest in mutual funds, think of it as putting something on top of a table that has 150 legs. If one leg breaks or 3 legs break, what's going to happen to whatever's on it? Really?
If
If it has 150
okay,
legs and
no,
3
no,
break off?
okay, no, not much, nothing.
Not much, right?
Nothing.
Well,
Okay,
so
so
that's
3 legs and 1 fell.
Yeah,
Okay.
so that's exactly what's happening here. Does that make
Okay.
sense?
Yes.
How long did it take me?